If you are worried about a forthcoming recession, really high inflation, and you want to insulate your investment portfolio, if you are fortunate enough to have one, dividends are fantastic, but not all dividends are created equally. So let's talk about some solid long-term dividends. By the way, if you are a new investor, one of the most common questions I get is, what is the best stock? What is the best dividend? There isn't the best. There isn't a single dividend company that is the best or a single stock that is the best. If you want to go the route of individual stocks, which is not recommended usually for new or inexperienced investors or even most casual investors, anything individual is risky. You're picking one stock and saying, I'm putting all my eggs in this. That's why a diversified portfolio is best. But again, if you're new and you're inexperienced, don't worry about the individual stocks right now. ETFs are fantastic, so let me show you a few and some other resources that will really, really help you. First up, because I'm a massive egomaniac, I'm not really, is this. Go right here and click on the menu, which is right here. Now, all of these resources are free. There isn't even an email sign up or anything like that. I'm not going to try to sell you something later. You click on it, and here are all the links that'll help you. I also have this tremendous free resource guide that is just a list of links that I use to do my own investing research. I use a website like Seeking Alpha to do most of my research. You can see here, SCHD is one of the most popular dividend ETFs on the market. It has an extremely low fee. It has a pretty solid dividend. They have 12 years of dividend growth, and they invest in 103 really strong companies, but these are their top 10 holdings. SPHD is another dividend ETF. This one is the low volatility one. And remember, low volatility can actually be good in recessions. It can insulate your portfolio. Look, all stocks will go down in a recession, but some will go down less than others. And as a dividend investor, what you're looking for are dividend kings and dividend aristocrats. These are companies that have paid and increased dividends for the last 25 or 50 years. Now, this one does have a slightly higher fee, but they do also pay monthly. And these are their top 10 holdings. I'm going to show you another really great resource and tool. This is for something called overlap. And if you don't know what overlap means, it just means if you're looking at two similar ETFs, you want to make sure that they're not holding the same investments. You don't want, if you were to buy both, for example, you wouldn't want two almost nearly identical ETFs. You'd want to diversify. This would mean in most cases that you would have one S&P 500, one technology, one dividend fund. This right here is a fantastic website. That's the name, ETF RC or Research Center. And all you do need an account, but it is free, is you go to ETF tools right here and you find the fund overlap tool. And then you can just compare the two funds. And look, 12 overlapping holdings, but that is 24.5%. That could be a lot, or maybe not. It's your decision. What's this guy looking at? He's probably watching this TikTok video right now. Now, one last thing. There are Dividend King and Dividend Aristocrat ETFs. These are a few. This one right here is NOBL or Noble, the Dividend Aristocrats ETF. This guy also has a little bit of a higher fee and a actually kind of small dividend when compared to the other two that we just looked at. And then there's this one, Regal, the mid-cap 400 Dividend Aristocrat ETF that has an even higher expense ratio and also kind of small dividend when compared to the first two that we looked at. And if we go back here for a second and click on the menu, you'll also note that there is an ETF comparison template. This right here is the template. Now, if you click right here, it is fillable. You can enter in your own data. Last little note is one of my favorite investing hacks when I'm looking at companies and I go, gee, I just don't know what to buy, is to actually cherry pick their top 10 holdings. It's ranked by largest first, which means that these funds have usually done a lot of research and have decided this number one stock will be our largest holding because we think it's sustainable, safe dividend, high quality company, etc. So if you did want some individual companies, you could formulate a little list and you could start doing some research using my various templates that will help you. At the beginning of this year, with the Fed cutting interest rates and people looking for higher, safer returns, I said 2024 was going to be the year of the dividend. And if you look at a lot of these ETFs, they're up 20, 30% in the last 12 months. So I was right. I think for many investors, that is going to be the same thing as we head into this next administration, the next 4 years, with inflation poised to skyrocket, the prices of things poised to skyrocket. You want to insulate your portfolio because there could be really tough times ahead.